I made almost $30,000 from Amazon, and I never owned a share this month. On top of that, my portfolio went up over 26% this month. And we're going to talk about how that all happened in this monthly review, where I go over my dividend portfolio and the passive income that the dividends pay, as well as the money I make from trading options and collecting all that premium that I then get to invest into more dividend stocks. So first off, here's a view of my account. And you can see we're at all-time highs again. So $219,000. That's awesome. You can see I don't really have that many different positions on. And if you've been watching, you've known that I've switched to kind of a more interesting method of using ETFs to generate income passively instead of having all my cash sitting there doing nothing besides securing a bunch of option plays. And then I was also trying to transition to selling some puts on SPY, which I did do. I did close out 3 contracts during the course of March where my SPY puts got to 80% profit. But I did end up doing a lot of active trading this month, which was, pretty fun and rewarding. And we'll go over what I was looking at for that too. Let's go ahead and switch to the portfolio view here. And you can see year to date, my account is up 23% now. So we're higher than we were before back in February of 2011. Or sorry, can't talk today. Higher than we were on February 11th, because back then it was 217, and now we're at 219. And you can just see that in March, had some crazy moves in my favor. This big loss here, that wasn't realized. That was the ETFs going down in price, and obviously those recovered by the end of the month. So like that 23 came back by itself, but I did realize a lot of income. But first, let's go ahead and talk about the dividend portion. So first off, I made a video that I was talking about my displeasure with Nusi, and I went ahead and sold that off. So you can see big fat 0 there. So no more dividends from Nusi coming in. I'm just going to hide those columns. We won't see that again for a long time. I'm going to leave that in because it does affect the calculations over here. We got some nice dividends. So Jeppy paid a nice dividend of 46 cents, higher than before. That bought 3 shares, which increased my monthly income going forward, another $1.38. QYLD, we actually had 2 dividends payout. I'm going by pay date when I'm tracking this. So there was 2 dividend payouts for QYLD, or at least that's when the cash hit my account. And here you can see I did buy 5,000 shares, or I got up to 5,000 shares in QYLD, but I bought those shares after the X date for the first date here. So I had 5,000 shares. I only got a small dividend because I didn't have the shares before the X date. And that wasn't really a concern to me anyway. I know that it'll pay off in the long run. Now, the second dividend was pretty nice to see. So on the 29th, I got to see $1,000 come in from just holding QYLD. And that went and bought 49 more shares, which increases my income going forward another $10. Like this dripping method with these income ETFs is just fun because you just see that income grow every month. And you can see that over here in column B, that like in March, my monthly income going forward from these dividends theoretically increased by $14.94, assuming dividends stayed the same. Devo paid a little dividend. That dripped 3 shares. We got a new addition to the portfolio here, and that's SCHD. I started by buying $5,000 worth of SCHD, but then early on I had some Tesla trades that I did that made a couple $1,000 profit, so I took that money and went and bought more SCHD, and that brought me up to 100 shares. And I got that before the dividend date, which I didn't think I did, but I'll take it. So a little dividend of $51, which unfortunately isn't enough to buy a share, so I'll have to buy a share, or probably add a lot more before then. This only pays out once every 3 months, so there's no rush to pick up that share to simulate a drip share. MFA is another one that pays once every 3 months, and I heard that they may be doing a reverse stock split. So they're taking one share, or they're taking multiple shares and combine them into one. And I'm not sure that I like that. I think that may lead to some selling pressure for some reason. So I may actually unload this position. If you've been watching, you know I just kind of have like an emotional attachment to this one because this one, I mean, it's sitting at like 250% profit, but I sold options. Like the cost basis is actually negative, and over the course of like a year or actually 2 years, the dividend is paying out more than the cost basis for what that it took to enter the position. Like, I don't know, it's just a really neat position, but I mean, that's just me giving it like an emotional attachment. Uh, SCHD, let me go back to that one. They actually just changed their holdings a little bit. Let me zoom this in a little bit. They added 14 more stocks, and these are actually names that I recognize, I like, thumbs up, as the majority of them are. And they removed 13 other stocks. And I'll be honest, when I'm looking at these, I don't follow any of these tickers. So, like, I see no loss in that. And I guess that's kind of the beauty of using these ETFs is they're doing all the work for you, managing the positions, and overall, like, this is just, what, 3% of the assets under control. So it's a very small portion change here. And they're adding stocks that I actually recognize and think would be here long term. So that's just one of the benefits of having money invested in ETFs. Like they do the work for you to manage it, and you don't really have to worry too much about it. But in this case, I think they made some good moves. Although I'm not too familiar with the other stocks that they dropped. I know this does come at the cost of the yield a little bit, and they dropped Dividend Aristocrat. What was it called? Emerson Electric. So the yield went down a little bit. But SCHD is actually one of my only positions that should grow over time, besides MFA potentially. So I'm fine with the yield of that going down anyway. Going back to the dividends, you can see so far this year, a little over $4,000 collected since I switched to the strategy. And then we got this guy that basically says that my estimated income is now up to almost 18,000, not quite there. I'm a little confused why it shows January 2023 is having like a bigger dip here in projected income, but it is what it is. It's also kind of neat to see like every 3 months, like the month that MFA pays out, like that income reaches 1,600 a month. That's really exciting, actually. Now, let's go ahead and talk about the little tracker again. So this was something that was started back when Randy was teaching everyone how to do options. And he had this idea that if you continue to invest $300 every month and get a 5% return, you can get to $1 million in like 10 years. And this was a play off of that, and he was able to use this for his YouTube channel back in the day. And I started using it just as like a fun thing. I never believed that you can get 5% a month, but I thought because I was contributing usually more than $300 a month that I might follow a similar path. And what's interesting is when you look at this from when I started doing that, I started with 47 months, and I'm down to 31. And over that time, that should bring me down to like 29 months if I was able to keep pace. And I don't know, just the fact that I'm only 2 months behind in that time is just really mind-blowing to me. Like, that's too close to be a coincidence, but I've also had some really good option plays that made me a lot more money than others. So if this holds any weight, then 29 months from now, I might be a millionaire. Who knows? Let's go ahead and look at the option income. So for March, I did realize a little over $31,000, and going over here, 27,827 of that was from just plain Amazon. And I say plain, but it took time to research and get a feel for when to enter and exit positions. And I'm starting to see that break down a little bit. So that little spark of genius or luck or whatever you want to call it, I think might be coming to an end. So I should probably be a little bit more conservative if I'm going to be continuing to play Amazon. But I think I cashed in on that research I did. And actually April, I'm already up 2,400 because again, I did play Amazon again today, and it went the way I wanted it to go. In February, that realized income here, if you remember, I did end up taking a risky gamble on Tesla that went against me, but had it paid off, we'd be having a different story here today. Let's go ahead and finally go over and jump into the Ameritrade and maybe talk about like what I was doing with Amazon here. For those of you that follow me, you know I've been using a lot of zebras recently, and people were asking how I was figuring out when to enter and exit my positions. And we're gonna go ahead and go in here, and I mean, just Friday was an interesting one. Go to the 1 minute chart here. Zoom in. So like, I spent maybe like 15 to 20 hours researching Amazon only, going back in time and simulating some trades on it, and really practicing when to get my entries and exits going before I actually started putting all this money on it. What originally brought me to Amazon was the stock split news. I thought I was going to follow Google a little bit. So initially what got my interest in Amazon was that. I thought people were overvaluing the split that was coming up, and I thought it was going to drop. So I played that. That turned out really good, and I made like 15,000 in like a day, essentially. And from that 15,000, I was taking that 15K. It was like house money, and was putting it into other trades. And let me start off by saying, like, this is kind of some risky stuff here. So I hope my editor put a little disclaimer up there. No, that's not funny. No, a little disclaimer up there. Thank you. And we'll talk about this. Do your own research, see if this works for you or not. But like, don't just blindly follow it. In fact, I think this might be coming to an end, or at least my read on Amazon is, it didn't play out so well on today. So today's Friday, and I'm recording this after the market closed. And what I was finding was Amazon kind of followed what SPY was doing and QQQ. And basically, I was looking for spots where Amazon looked like it was being overbought. And you can tell that by like where RSI was going up. Looking for engulfing candles to also simulate a reversal, signal a reversal. And then on top of that, see if there's weakness or strength in SPY. SPY seemed to be a better predictor for what Amazon was going to do than anything else that I found. And what was also interesting is like when SPY like started trading like in a range, every time that SPY dipped back down to where it was before, Amazon dipped a little bit further every time. So that was kind of an interesting thing. But anyway, on April 1st here, when RSI got up here, and we got it. Well, let me switch to this. I have this on the 1 minute. Let me make sure I got the right time here. Was it here that I got in? Yeah, it was actually here that I got in. So right here, RSI was up. SPY was starting to show a little bit more weakness again. QQQ was turning red. So like everything's saying, okay, stock markets might be going down. We got a little weakness going, maybe hit a little resistance. And then we got this little candle here, an engulfing candle. Hopefully that's big enough on the recording here. And so right here is where I entered into a bear zebra on Amazon. And you can see like immediately after I did that, it did dip. And I probably should have taken that profit right there. I didn't. That was only like a $800, $900 gain. I was aiming for 1,000. That was just me being greedy. And then Amazon went up. And if you're watching the Discord, you saw me post, oh, I made a bear zebra on Amazon, followed by, whoops. So Amazon shot up here. And again, I got a similar setup that was setting up. RSI showed that it was overbought. SPY was showing weakness again. QQQ went from green to red again. So I was like, this might be another top. So I actually went ahead and bought a few more combinations of the previous zebra that I put on. So I basically DCA'd in a little bit. And then immediately after this one, Amazon did go down. But this wasn't actually enough for me to make a profit yet. And later, it did go down. Where was it? I didn't get under here. So there's actually like this candle here. I was able to exit with about a $2,000 gain off of the entire position. But that's because I did DCA up here. And that's a dangerous thing to be doing unless it's money that you can actually afford to lose. Because if Amazon just decided to keep going up, well, I just added more risk to that play Whereas back here, this was only like about 3,200 to put on. Up here, I think I bought like 2 contracts, so this became a $9,000 risk. And you know, it could have went the other way. I could have lost 9,000 off this play if Amazon went up. But I did get out here because at the same time, QQQ was starting to toggle green a little bit, and I was worried that there might be more strength coming in. So I got out, even though I was thinking, you know, Amazon might retest like these levels back here. I wanted to hold for the entire day, but decided to take that profit and get out. And you can see that Amazon did end up going back down to 255. Could have made a lot more money had I held it, which I didn't. But, you know, a win's a win. Move on to the next trade. Another trade that was interesting was one where Amazon kind of gave me the slip. So I bought a bear zebra at the end of the day here, and I was unable to get out with a profit at close. And actually, I was unable to get a fill to get out. I didn't want to hold this overnight. And sure enough, Amazon spiked up when I was holding this position over the night. So I was looking at some pretty big losses at that point. Now, on this play, what I ended up doing was selling, or not selling, I bought to close the short position of the zebras because those were at like 70% profit. So let's take that off. And then any movement down, we profit a lot more off the deep in the money puts at that point. Actually, at this point, they weren't that deep anymore. But, you know, they wouldn't be fighting these shorts, losing value on the way back down. So then sold basically or bought to close these shorts basically at the top here. And then when Amazon came down, even though it wasn't down much more than where he entered the position, I was able to sell to close the long positions for a small loss, but the gain from closing the short out up here offset that for like a net positive of like $1,200. It's just an interesting way to manage that zebra. And again, that's because RSI was showing that was high. SPY showed it was at a resistance. Like everything just seemed to like set up perfectly. Like it's gonna dump. Let's go ahead and close this out and just ride this dump. And sure enough, it did go down. And I was able to get out with a profit, although it did spook me a little bit. So that's the first time that Amazon didn't quite act the way that I thought it would. And I had to manage my way out of the position. Second time that Amazon didn't act the way I thought it would was actually today. So that's 2 times in a row that Amazon did not quite do what I wanted to do, which is why I'm starting to think that maybe this read that I had is starting to become invalidated with whatever's changing in the market. So I'm going to stop doing that and go back to selling puts on SPY, roll those if they get tested, you know, aim for that $1,500 of income each month. Let's go ahead and pull up the last thing I wanted to show you. And recently I've been adding this to the monthly review where I just show you my income. So my income for my W-2 job, it doesn't vary. Like that's pretty set in stone. And dividends, it was nice to see that go up. YouTube and sponsors actually brought in about $735. This is still an estimate because I can't see what I made on the last day of the month yet. But $735 is pretty close. And that was because I did have a sponsored video that paid out well. And I actually got offered to do a sponsored video in April that I turned down because the stock is just, well, it's clearly a pump and dump, and I just can't even pretend that that's a good stock. I trust that when I do a sponsored video, you guys are going to do your due diligence and decide for yourselves. I'll accept sponsorships for stocks that, you know, are questionable, but not ones that are blatant garbage. So, you know, keep that in mind. If you see a sponsored video for a stock, do your due diligence. I did receive a Ko-Fi tip, I think from Sam. That was pretty nice. And I know you look at this and you're like $9 off this. That doesn't really mean much, but no, it makes my day when I see that. And you know, that bought lunch for 2 days. Like that's pretty cool. I love that. And I'm glad to have him join the Discord. I hope he learns a lot, and he seems very interested. So welcome to the community. And then over here, the options income. I think it's funny that I was like, oh, I'm going to try to be more conservative and only make $1,500 a month. And then I go and trade Amazon. I think we actually put this up already because, you know, we already got nice income from a trade on April 1st already. And so I have a question for you guys. Do you prefer just having the monthly portfolio review, or did you prefer the weekly reviews that I used to do? I kind of transitioned to doing the monthly because I thought I'd be trading less, but obviously that's not the case anymore. So let me know. Do you prefer the weekly or the monthly review? And if you guys have a topic of interest, go ahead and put it down there, and maybe it'll become a video. Thank you for watching. I hope you guys enjoyed, and I hope you had a good March too. And see you guys next week.